All right, let's dive in. Today, we're not just going to talk about using Dynamics 365 Finance. No, we're talking about truly mastering it. We're going way beyond just clicking around the screens and into the real strategy, how you architect your financial operations for actual, measurable success.
And I want to kick things off with this quote because, honestly, it sets the stage for everything. Think about that for a second. It's the core idea here, the massive difference between just knowing which buttons to press versus understanding the why, the financial impact of every single choice you make. It's what separates a system operator from a true financial architect.
So, first up, account structures. You have to get this right. I mean, if the foundation of your house is cracked, the whole thing is going to be a problem, right? Well, this is it. This is the absolute foundation of your entire financial system. Get it wrong, and you're signing up for some seriously expensive rework down the road.
And you know what's wild is how often this goes sideways. You see it all the time. One, giant, messy structure trying to do everything for both the balance sheet and the P&L. Or a dozen different financial dimensions that just completely overwhelm users and wreck your data quality. And my personal favorite, zero governance. You know, where someone adds a temporary dimension that somehow becomes a permanent part of the chaos. Sound familiar? I thought so.
So let's back up. What is an account structure, really? At its heart, it's the blueprint for every single one of your ledger accounts. It defines the what, the main account like cash or sales revenue, and then it adds the context. That's your financial dimensions, like a specific department or project. But here's the most important part. It's the rules that connect them and govern how they all play together.
And this right here, this slide just lays it all out. You've got two paths. The system operator, they create that one giant chaotic structure. But the architect, they design clean, separate, logical structures. One for the P&L, one for the balance sheet. They use the fewest dimensions possible to get the most meaning, and they align all the rules with how management actually needs to see the business. It's night and day.
Okay, let's move on to our second pillar, financial reporting. The goal here is simple but huge. We want to build powerful business models inside of D365, not just spit out glorified spreadsheets that someone has to manually clean up in Excel every single month.
And the common mistakes? Oh, they are so easy to spot. You've got reports that are just a raw data dump of account numbers with no logic at all. You've got columns hard-coded to say January instead of using dynamic periods like current month. And you have reporting trees that look nothing like how the business is actually structured and run.
And here it is again, that crucial difference. An operator builds a report that's basically a dead end. It's a static output that always needs to be fixed in Excel. An architect, on the other hand, builds a report that is a dynamic model. It's one single report that can serve your official statutory reporting, your management dashboards, and your audit requests, all without any manual tinkering.
Now, to pull this off, you have to master these 4 building blocks. The row definition, that controls which accounts you're looking at. The column definition, that handles your time periods and comparisons, like actuals versus budget. The reporting tree lets you slice and dice the data by your organizational structure. And finally, the report definition pulls it all together into a polished final layout.
Next up, the year-end close. Look, everyone talks about making the close faster, but the real goal here isn't just speed. It's about control, predictability, and being audit-ready from day one. Speed is just a really nice byproduct of having great control.
So where does this process usually fall apart? It's the usual suspects, right? You've got checklists living in some random Excel file instead of in the system. You have tasks with no clear owner. And then there's that super dangerous culture of, don't worry about it, we'll just fix it with a journal next month. That's how small errors snowball into huge problems.
The architect's approach, though, is completely systematic. They use the financial period close workspace that's built right into the system to manage every task and assign every owner. They enforce hard period locks, no sneaky late entries. They automate every single recurring journal they can. And what's the result? An audit trail that's built by design, not scrabbled together in a panic.
Let's talk about fixed assets for a minute. The system's job is not to magically guess how to calculate depreciation. Its job is to flawlessly execute the specific accounting policies your company has laid out. You're basically encoding your company's rulebook directly into the software.
And the operator approach here is just risky. It's one depreciation profile for everything, mixing tax and book values, ignoring critical timing rules. The architect's blueprint, however, is precise. They create multiple books for GAAP versus tax.
They align every single profile with the formal policy documents, and they make sure the configuration is so clean that auditors absolutely love it.
All right, let's tackle a feature that gets a really bad rap: budget control. This is not some optional, annoying nice-to-have. This is fundamental risk management for your company. It's about preventing overspending before it ever happens.
So why does it fail so often? Well, it usually comes down to three things. Number one, it gets turned off because users complain. Number two, a total lack of training means people have no idea why their transactions are being blocked, which just creates chaos. And number three, the budget is defined on dimensions that are just way too generic to be useful. But the architect? They reframe the entire conversation. They don't just flip a switch, they roll it out gradually, starting with soft warnings before they ever move to hard blocks. They teach the business that this isn't a punishment, it's governance, it's putting up guardrails. This lets them apply super strict controls where they're absolutely needed, while still giving flexibility for other operational expenses.
And that brings us to our final and maybe the most critical pillar of all: cash flow. This quote says everything you need to know. You can look incredibly profitable on paper and still go out of business tomorrow if you don't manage your cash, always.
Because of that, we have to systemize credit and collections. I mean, think about it. Every single day you let an invoice go unpaid, you are giving that customer an interest-free loan with your money. It's time to stop financing your customers for free.
And the difference here is just stark. The operator is relying on manual follow-ups, sticky notes, emails that just can't scale. The architect has their collection agents working from prioritized queues right inside D365. The operator lets people override credit limits without any justification. The architect automates blocking rules right at the point of sale. It is all about being proactive, not reactive. Okay, so now let's tie all of this together, because these 6 pillars, they aren't independent things you can work on. No, they are a deeply interconnected system, and a failure in just one area can set off a really devastating chain reaction. In this slide shows you exactly how it works. It's a domino effect. Bad account structures make your financial reporting totally meaningless. That meaningless reporting hides the fact that you're blowing your budget. Poor budget control directly hurts your cash flow, and weak cash flow, well, that ultimately destroys your profitability. See, it all starts back at that foundation.
So we end right back where we began, with one really crucial question I want you to ask yourself. When you approach D365 Finance, are you just operating the screens, or are you truly architecting a system for financial excellence? Because that choice, it makes all the difference in the world.